Good, solid opening for the market, about 70 points higher for the Nifty.
Benchmark indices are up close to about 0.5%. In the last 30 minutes, we've come off a tad bit from the high.
We did see some fall from the highs, but still, it is managing to be in the green with decent gains right now.
Another positive session for our markets, the 7th one in a row. The Nifty right now, as we speak, is exactly at that 17,700 mark. It's come off from the highs of about 17,750 that it hit. All in all, another good session, right? Markets are slowly creeping higher and higher. And now 17,700 seems to be conquered.
Well, what a day it was for trade. We started off fairly well. Then we saw some sort of congestion above that 17,700 mark for the Nifty, only to find some more strength in the market and conquering that 17,700 mark by the end of trade. The Nifty ending closer with a century higher, and the Nifty Bank was the one which was the star batsman, up 500 points or almost 1.5%. You're watching us here on Markets Today, a show where we track 6 hours of trade in 5 headlines. I'm Mangalam Malu. Let's talk about those 5 headlines then. Stock markets rose for the 7th straight session to end at a 1-month high. The sensex gained over 300 points, the Nifty nearly 100 points, led by the financials, and the Nifty Bank up 1.5%. Expectations of a higher weight in the MSCI index owing to increased foreign investment room propels Kotak Mahindra's stock. IIFL says an increased weightage can lead to an inflow of $750 million. Bank of Baroda gained 3% on the back of strong advance growth and deposits growth as well for the fourth quarter, echoing the performance of its peers. The news powered up the rest of the banking pack as well. Analysts, however, advise against exuberance. And in stocks making news today, Shilpa Medicare jumped on getting a US FDA nod for its psoriatic arthritis drug, while a technology license pact with Mitsubishi for electrolyzers lifts Neogen Chemicals. The Indian Met Department predicts a normal monsoon this year, contradicting SkyMet's prediction of a below normal monsoon. Both forecasters agree El Nino-like conditions are likely, but the government believes it will not have any adverse impact on this monsoon. And here's the lineup of what we have in the show for you. We'll bring you the biggest market opinions coming in from Gautam Duggad of Motilal Oswal Financial Services, Arvind Sanger of Geosphere Capital Management, and in corporate voices as well, we have Harin Karani, who's the MD of Neogen Chemicals, which was the stock of the day, up 15% after a big move yesterday too. But before all of that, let's take a look at the day's market action. Stocks on the large trade gain for the 7th straight session for them to end at the highest level that we've seen in a month. The Nifty and the Sensex gained 0.5% each. The financials led the rally, and then we saw a big move come by the Nifty Bank, which was up over 500 points. Surabhi Upadhyay joins in with the details of the day's trading action.
Well, it was the 7th straight day of gains on the street today, with the Nifty cruising above the 17,700 mark. Pretty interesting, and lots of power coming in from bank stocks today. That's where the surge came in from. But the Bank Nifty almost up 1.5%. A lot of the big names like an Axis Bank, ICICI Bank, SBI, all leading from the front. We've actually got some very robust business updates from most lenders, whether it is banks or NBFCs, and that really aided sentiment in this part of the market. For Kotak Mahindra Bank, there was an added fillip. There's expectation that its weight will go up in the MSCI indices when the index review happens in May. That could lead to an inflow of over $700 million. That was the expectation during the rounds, and that stock was a star performer on the Nifty with a 5% up move. Autos did pretty well as well, because we had the monsoon update come in, and it seems that maybe the monsoon won't be as bad as previously feared. That worked very well for stocks like Bajaj Auto, 52-week high on that stock today, Eicher Motors, Maruti, M&M. The entire auto pack was pretty nicely revved up, if I could say. The only sort of sore spot in the market today was IT. The nervousness is really palpable on the street ahead of earnings. TCS reports tomorrow. That stock was down. So was Infosys, Wipro, HCL Tech. Your entire frontline IT pack was reeling under pressure. The market is at a very interesting juncture now. The Nifty is now running into a very critical congestion zone around the 17,750 to 800 level, 17,800, and it'll be very important for it to take out this level if the uptrend is to remain intact. Similarly, the Bank Nifty is looking at a pretty critical level around the 41,730 level. That's where the 100 DMA, daily moving average, comes in. So some of these levels and technicals become very important after the market has seen a pretty strong winning streak over the last few days.
A big winning streak indeed, and powered by a move across all sectors. Let's get some market opinion in then. Gautam Dugar of Motilal Oswal Financial Services says that the Nifty's EPS growth in FY23 wasn't that bad despite steep hikes in interest rates. Whereas Arvind Sanger of Geosphere Capital Management believes that rising rates impacted fund flows into India. But remember, over the last 7 trading sessions, the FIs have been buying in the cash market.
The beginning of FY23, our EPS estimate for FY23 was 850 rupees. So over the last 12 months, it has come down by about 4 to 4.5%. Now, despite that, we are still about to end the year at about 13 to 14% growth, which, as I said, on a base of 35% growth in FY22, I'll still consider it as a very healthy sort of a growth, because back in April 2022, we did not anticipate a 300 basis point or 275 basis point kind of an interest rate increase. Or maybe, sorry, I stand corrected. It's about somewhere about 250 basis point of a repo rate hike. So given the way things have moved in the last 12 months, I would reckon this 13-14% growth in Nifty is still very, very healthy.
The headwind of rising rates was causing, fund flows to be negative. But India's own earnings growth and economic growth is not on the same shaky wicket that the U.S. economy is. So I think in that sense, that would be a positive for Indian equities. I think that overall, this quarter should show that earnings strength in Indian, corporate India is very much on track. And if that continues to be the case, then I think, whether it's the financials, which are the lead sector, or it is important domestic-facing sectors, I think they should start to become clear that the earnings story is very much on track.
All right, with that, let's move on to the second headline now. Expectations of a higher weight in the MSCI index owing to increased foreign investment room has propelled Kotak Mahindra stock 5% higher. In fact, that stock was pretty much the stock of the day, led the Nifty bank higher, which in turn supported the Nifty itself, the top gainer on the index as well. IIFL said that an increased weightage of foreign investment limit could actually lead to an inflow of up to $750 million. What does this mean and how is this calculated? Vivek joins in with all the details of why the stock moved so much today. Vivek.
Well, absolutely. So, the latest shareholding pattern update is what is getting the street excited. So, foreign headroom availability of over 25% actually implies that there is now a likelihood that MSCI will take this into account and thereby increase the weightage that the Kotak Mahindra Bank has in the MSCI Global Standard Index, the main index, and almost double it from the current factor that it has. Currently, Kotak Mahindra Bank has 0.5 times factor as far as the Global Standard Index is concerned. If this particular factor is increased to 1, which is what analysts are anticipating post the shareholding pattern update, you will actually see inflows of close to $750 million. Now, this is an estimation as for what IIFL has. Now, also, what you have to take into account is the fact that MSCI will have to have, number one, except that the foreign FPI headroom has gone above the 25% limit, and number two, whether Kotak Mahindra Bank has gone ahead and updated the shareholding pattern in time. It does appear as though both of these criteria are met at this point of time, which is why in the May index review, to expect to see the weightage of Kotak increase in the MSCI Standard Index, and one-time inflow of close to $750 million is how MSCI is likely to go ahead and implement this particular weight increase.
All right, we understand that, Vivek. Thank you so much for explaining. In fact, on that note, let's also speak about, IIFL Securities' understanding of what this could mean for inflows into Kotak Mahindra Bank. In fact, the expert spoke with us and said $750 million is the kind of flows that we could expect.
If one dwells into the MSCI methodology framework, for the stocks that are part of the index, if the room opens about 25%, there is an upward revision in the adjustment factor. So Kotak should see its adjustment factor getting revised upwards from half to 1. So this should translate into an inflow event for Kotak Mahindra Bank in the May 23 QCIR. We extrapolate inflows to the tune of $750 to $800 million, which is almost 7.5 to 8 days ADV.
Right, to the third headline of the day, and it was a PSU bank again. We had Bank of Baroda gaining almost 3% of the bank, of a strong growth coming by in their advances and deposits for the fourth quarter, echoing the performance of all its peers. Abhishek Kothari joins in with the details of the fourth quarter update. Abhishek.
Well, it's for the first time that Bank of Baroda has given an operational update in terms of the business parameters. So amazing business momentum continues for second quarter in a row like we saw in Q3. So Q4, the deposits are up 15% YOY and about 4.7% sequentially. The domestic deposits are up 13% YOY and about 4.3% sequentially. International deposit momentum was robust at more than 31% YOY and more than 7% sequentially. The domestic CASA ratio has improved on a sequential basis. Loan growth pretty strong, coming in at 19% YOY and about 5.4% sequentially, while domestic loan growth is nearly about 17% YOY and about 5.2% sequentially. So the international advances, that momentum has been robust at 30% YOY and about 6.5% sequentially. In the domestic loan growth, they saw retail loan growth being at 27% YOY and about close to 7% sequentially. So you saw the global CD ratio or credit deposit ratio improve both YOY and net sequentially. So the net interest margin can remain stable or improve on a YOY and quarter-on-quarter basis. Back to you.
Abhishek, thanks a lot for that. In fact, the US banking crisis is far from over. That's the word coming in from noted economist, also known as Dr. Doom, Nouriel Roubini. He spoke exclusively to CNBC-TV18's Lata Venkatesh this morning and said that he expects more trouble for the financial institutions in the US. Also believes that India, along with a few other emerging markets, will actually be a safe bet for investors to park their investments, and that comes as a bit of a relief.
I don't think it's over. I think there'll be more financial institutions going to be in trouble. And recently, the problems of the banks have come from what is referred to as market or duration risk, meaning having long-term securities whose value is falling as interest rates are going higher. But we're going to go from market risk to credit risk, because now there is a beginning of a credit crunch in the banking system, especially the regional banks that lend money to households. Suppose that the new normal is 6% inflation, then 10-year treasury yields, they'll have to go eventually to 8%, 6% for inflation, and 2% real. Now they're at 3.5%. If they go from 3.5% to 8%, you have another 50% losses on what is supposed to be a safe, secure, and defensive assets. Trillions of dollars of dollar treasuries or EM debt linked to the dollar, or of high yield and high grade bonds. So the risk of significant losses, both in bond markets and even in credit markets, are significant. Structural factors for India go in the favor of India. Potential growth around 7%, maybe higher with more economic reform, a young and growing population, a catch-up of per capita income because it's much lower than China. So India is going to be a rising power in the next few years and decades with additional economic reforms. So certainly India and a few other emerging markets might be a good place to invest, both for fixed income and even in the equity markets.
All right, so that's some commentary coming in on the markets, the way the world is likely to be from the man himself, Nouriel Roubini. What we'll do is take a short break, come back, discuss more about the markets, all the other news that made headlines.